logging in to a session on Tally.ERP. Today we have Naveen Rajpurohit, who is a eminent chartered accountant and a person who's highly respected in the industry. He comes with more than 15 years of experience. He's an indirect tax partner with BDO, a leading consulting firm in the country, and we will talk to him in detail about a concept in GST called time of supply. Welcome, Naveen.
Thank you, Satya.
Thanks for coming over. It's a pleasure to have you here, and let's jump in straight. GST is a new concept, like you know. Supply has come in new. We were all used to the word sale. We were all used to the word service, but now supply has come and taken over. Okay. Wanted to understand more from a perspective of a layman as to what does this supply mean, and when does this actual time of supply come in, which actually means that when does the liability get triggered for me to pay taxes?
Okay. See, under the GST law, the liability is when you supply the goods or the services. But however, the payment, the liability to make the payment, the taxes, will be as per the time of supply of either goods or services as specified under section 12 or 13 of the GST law. So there is a certain rules which have been specified under the time of supply of goods or services. The general rule basically is that the date of invoice when you raise or the receipt of payment, whichever is earlier, is the time when you are supposed to make the payment. That is the liability. That's when liability arises. So that's what's specified under section 12 as well as under section 13 for both, applicable for both goods as well as for services.
So if you can break this up a little bit, Naveen, as a manufacturer, I used to always I was used to paying excise on removing the goods from the factory. As a trader, it was another scenario. As a service provider, another scenario. So if you can break this up, the entire concept of time of supply for a manufacturer, a wholesaler, a trader, and also a service provider.
Yeah. So with respect to manufacturer, wholesaler, and trader, one needs to again analyze that when he raises an invoice, right? That is the time, or that is the time of supply when he supposed the liability arises. For the manufacturer, the law clearly says that the last date on which he is required to raise an invoice, like when he removes the goods, then he is required to raise an invoice, or when goods are not removed, but the goods are ready for delivery of to the recipient, that is the time of supply when he is supposed to raise an invoice and charge tax accordingly.
So you mean to say, even if we have, if a manufacturer has manufactured the item but not shipped it out and not even raised an invoice, does the liability arise?
No, liability doesn't arise at that point of time. It is when he is supposed to supply. Okay, he is supposed to supply and it is ready for delivery to the recipient. In such a scenario, the things will come into picture. Whereas for manufacturer, removal is the criteria. At times where goods are not supposed to move, like for example, lease transaction. Lease anyway, it is a service, but I am just giving an example that in case where goods are not supposed to move, but goods are lying over there, then when it is ready for delivery, that is the time when he is supposed to raise an invoice and charge taxes accordingly. Now come to the service part of it. When you come to the service part of it, again the date of invoice when he is supposed to raise an invoice, or he completed the services, then the law prescribed 30 days time. Within 30 days, he is supposed to raise an invoice. So that is the time of supply, or he receives the advances, any payment received, whichever is earlier, that is the time of supply with respect to services. Now this 30 days time limit is not covered for the goods. This is only with respect to the services. Okay. Whereas in case of goods, it is the date of invoice, or when he is supposed to, last date when he is supposed to raise an invoice, that is at the time of removal of the goods, or at the time the date of delivery of the goods, or he receives the payment, whichever is earlier, that is the time of supply with respect to the goods.
If you can go a little deeper into services, if you can explain with an example the 30-day rule or 30-day concept that's come into tax, that will help.
Okay. Now, I provided a services. any kind of services. I provided a services and the service is completed. So I can raise an invoice the moment I provide the service, or it gives me 30 days time to raise an invoice. So within 30 days from the completion of a service, I can raise an invoice. Like I go to a chartered accountant for a service, he provided audit services. Now he's completed his service, he's supposed to raise it. That's a mandatory. He's supposed to raise an invoice within 30 days from the date of completion of the service. If it doesn't raise, take a scenario, if it doesn't raise an invoice, then the 30th day from the date of completion of a service, the 30th day, that will be the time of supply. The liability arises on the hands of the service provider.
Okay. I think that's something important for people to note, because I don't think law has ever prescribed when I need to raise an invoice, or when do I need to when does the liability occur on the event of raising an invoice. I think this is an important aspect. I think that people need to be aware of. Yeah. What happens in cases where there is continuous supply? I mean, we have this thing where invoices are raised after a bunch of transactions happen, because there is no way I can raise invoices to in that kind of a service or in that kind of a supply where transactions happen almost multiple times in a day. So it's a continuous supply. So where we both as businessmen agree to it that okay, I'll raise an invoice after a particular time period. So what happens in those cases?
Okay. Now this continuous supply of services which are also currently existing in service tax regime, in the current tax regime. Now the new concept which got evolved under the GST law is a continuous supply of goods also. This is the first time they have introduced the continuous supply of goods, where you enter into a contract for a year and you keep supplying to them. So the law clearly says that you're supposed to raise an invoice when you receive the advances, the receipt of payment, or when you're supposed to give this the last date of the statement of accounts, like a running bill, monthly basis you raise an invoice, a running bill, or a statement of accounts. That is the time of supply with respect to continuous supply of goods. Now, when you come to the continuous supply of services, the law says that if a service which exceeds more than 3 months, then it is considered to be a continuous supply of services. Now, here, as per the agreement or as per the contract, the event which arises, the milestone which you complete, that is the continuous, that is the time when you're supposed to raise an invoice, or the amount received, whichever is earlier. 2, if you're not able to ascertain as per the contract under section 28, it says that if you're not able to ascertain what is the event, sometimes you enter into a contract for more than 3 months, but the event is not specified. Then the law clearly says that on the completion of the services, you're supposed to raise an invoice and pay tax accordingly. So that's the time of supply with respect to that. There's also another concept which is there under section 28 with respect to services. If you see under section 28, it says that where the payment is linked to the completion of an event, okay, the invoice shall be issued before or after the time of completion of the event within the prescribed time period. So in all this scenario, the prescribed time period of 30 days will continue. So that will continue. So here 3 things in supply which you have to keep in mind is that, one, with respect to where you are able to ascertain when you are supposed to raise an invoice or when the recipient is required to make the payment, that is the time of supply. If you are not able to ascertain, there is no ascertainable, is that when you receive the payment, that is the time of supply of services, right, or the completion of the services. 4th scenario is when the payment is linked to the event, like you achieve the milestone, that is the payment. Then the law clearly says that the time of completion will be that event. Okay. The 4th scenario which law clearly prescribed is that the government, both the state government and the central government, can also prescribe a certain transaction which will be considered to be a continuous supply of services, even though it does not fall in the definition of a continuous supply of services. So the rules will be applicable as prescribed under section 28.
So what happens in case of sales return or services which I don't know if there's a concept of service returns, but what happens if the service is not accepted? So how does that get treated?
Okay. See, with respect to sales returns, generally the concept is that when you remove the goods and the other person doesn't accept it, okay, then he returns it back after for a period of 6 months. The time limit given under the GST law is for a period of 6 months. The dealer is required to raise, or the registered taxable person is required to raise a credit note. So within a period of 6 months, he is required to raise a credit note. But there is no concept of service return under the GST law. Either the service gets ceases to be, you enter into contract and the services ceases, or there is a deficiency in the services, so you have to alter the rates. That's the only option available under the GST law. So in case of where the services are ceases to exist, that means you enter into contract, things doesn't work out, you cancel the contract. So it ceases to be contract. The law says that when you cease the contract, that is the time of supply. Within the prescribed, again 30 days time period is given, where he is supposed to raise a debit note or credit or whatever. But till whatever the services is provided, he is supposed to raise an invoice and pay tax accordingly. For the difference, there is no debit note or credit note, whatever, unless there is a excess invoice is raised. Now take an example that you entered a contract for 1 lakh. You have provided a service of 50,000 or 60,000, and then you seize the contract. Then for 40,000 you don't have to raise an invoice, but the balance, the 60,000, what your service you have rendered, you have to raise an invoice for 60,000 when the contract ceases to exist. When you enter into a contract, you raise an invoice. So for 1 lakh rupees, you already raised an invoice. Your time of supply in your hands is already over. So subsequently, either the contract get cancelled or there is a deficiency in the contract. Then there is a requirement for the assessee to raise a credit note and declare accordingly in his returns. That's how it is there under the GST.
Interesting. One peculiar scenario, for example, if you take where we both have entered into a contract and like you said, I've raised a invoice of 1 lakh, but you've gone ahead and cancelled the contract after availing my services for say 50,000. Okay. I need to raise a debit or a credit note, whichever way, for the remaining 50,000. But what if I refuse to do that? Does government give you, or the tax department, do they give you a reprieve for the 50,000, or it's just that our relationship has gone sour and I refuse to raise the 50,000 credit note for you, but you paid tax on 1 lakh, but you avail services only on 50,000. So how does that get treated at all? I mean, I know it's a business call. Department can always lift their hand and tell that this is between you guys. You handle it.
True.
Is there a way that that can get sorted, or is it just a business call?
There is a way. So what happens is that when you provided a services to me, but you also raised an invoice of 1 lakh and you discharge your liability to the government. But according to me, it is not the service which is fully rendered. So there is a deficiency in the service or whatever reason. Then it is my duty to raise a debit note or a credit note, as the case may be. I have to raise on you.
What if I don't accept?
You don't accept, it is then
it's a business call.
It's a business call. Then it's a business call. There's
government just says I cannot.
Yeah.
So what we're saying is, in some places they say that I will get involved in the negotiation, for example, the 30-day thing.
Yeah.
In this case, they say that no, I don't want. You guys do what you want.
True. See, that's why even you have the matching concept, under the GST law, where the onus is on the recipient to ensure that he claims the credit properly. So when I have accepted and I have claimed the credit, and subsequently when I raise, so because for you it will become an input tax credit, right? Okay. So again, it's if you look into business call also, you will be accepting that a debit or a credit note. Otherwise, you already discharge your taxes.
Correct.
So that's how it will be.
Got it. So another transaction which is very prevalent is a sale and leaseback. So how does time of supply work there?
Okay. See, as on date, even in the current tax regime, lease is also construed to be a deemed sale. Now here, sale and leaseback is, there are two transactions. One, you are selling the goods to me, and subsequently I am leasing back to you. Okay. So the sale is considered to be a supply, and apply the supply of goods, the time of supply of goods rules, that is the date of invoice or the delivery of the goods or the payment receipt, whichever is earlier in all the three transactions. Now, in case of a lease, my schedule 2 of the GST law clearly says that lease is construed to be a service. Lease is construed to be a service, and therefore I have to apply section 13, the provisions of service time of supply rules, and not the supply of goods, the time of supply of goods. So what happens, the lease, when I am going to give back to you, it will be a continuous supply which is more than 3 months, if at all, the lease transaction, if it is more than 3 months or whatever it may be, then each of the event occurring, I have to apply the continuous supply of services rules, which says that if I am able to ascertain the payment schedule as per the contract, like the lease can be monthly basis rental, it can be quarterly, it can be annually, whatever it may be. If it is not ascertainable, then the payment which I receive from you on a monthly or quarterly basis, yeah, that's how one has to apply with respect to leaseback.
So basically, two transactions. That is,
two transactions.
One is a sale transaction, one is a leaseback transaction.
One is a leaseback, and leaseback has to be a service.
Correct.
It is a service.
Okay. Got it. So Naveen, what happens in case of reverse charge that is prevalent now also in service tax and also to some extent in VAT, I think. But let's talk about reverse charge. How does time of supply play out there?
Under the reverse charge. Yeah. See, currently under service tax we have a reverse charge mechanism. The same concept has been also there under the GST law. But over and above, there is also a reverse charge mechanism with respect to goods. Okay. So for the first time they have introduced a reverse charge mechanism for the goods. Now, how does it going to work out for the time of supply of goods under reverse charge mechanism? And so with respect to services, there are 3 things which has been laid down under the law. It says that the time of supply for reverse charge is the date of the receipt of goods, the date on which the payment is made, or the date immediately following 30 days from the date the issue invoice by the supplier, whichever is earlier, that is the date of receipt of goods, the date of payment received, or the date immediately following 30 days, that is from the date of invoice. You have a 30 days time period. Within that, you have to make the payment. If you are not able to determine in all the 3 things, then the date would be the book entries what you made in the books of accounts. There is also a proviso which says that with respect to receipt of payment, it is the book entry what you make, the receipt entry what you make in your books of accounts, or what is debited in your bank account, whichever is earlier. So that's one thing. This is with respect to goods. The same thing with respect to services. The only difference is that here the 30 days time period is given, but under the services it is 60 days. So what does the law says? It is the date of receipt of the services, the payment received, or 60 days from the date of invoice of the supplier. So that's what, whereas with respect to goods it is 30 days, with respect to services it is 60 days. So that's how the concept is there under the reverse charge mechanism, right, under the GST law.
Very interesting. Also a little bit about composite supply, and also a little bit on the works contract side of things. Works contract services, there was a Works Contracts Act and everything. So people are very used to that. Are things going to change in GST for the works contract guys? And also composite supply. I know there's a definition of composite supply, but is it different from what it is now? Do people need to be aware of something more?
Actually, it is similar to what is there currently even under the VAT law or under the CST law, that anything is done before the delivery of the goods. Before the delivery of the goods, the transaction will be part and parcel of the sale price. Like for example, if you are selling a textile, right, or a saree, with that a package, the cover. Now, saree is exempt, whereas the cover is taxable. Now, the rate of tax applicable for the cover will be the saree rate. That's how. The same concept is also composite supply under the GST law, which says that if you are providing the services or if you are supplying the goods, along with that, if there is any ancillary activity which is carried out, it could be a goods or a services, the predominant, the principal predominant, whatever you call it, the supply of goods or a services will also take the color of the ancillary services. Like for example, if I am selling the goods, With that, there is also insurance, which is a service. There is also a freight charges. This is also a service. So now these things will part and parcel of the composite supply. So you need to find out in the composite supply what is the predominant, whether it's a service or a goods. If it is a goods, then apply the time of supply of goods even for the ancillary, even if it is a services. Similarly, if it is a service and small part is covered like goods in an AMC contract, there is a predominant is a services like AMC of the software. Predominantly it is a service, but part of it could be goods. Some screws, nut, bolt, whatever you fix to the laptop, including the services. So that even if it is a goods, you have to apply the rules of time of supply of services. So that's how the law is evolved.
So whatever is taking the, whatever makes the predominant part of the contract, that would be the, that would determine the time of supply.
Correct. That
So similarly, the rates also.
similarly the rates also.
So even in the case of software that you took, if the nut and bolt is at say 5%, but the software is at say 18%.
So even the nut bolt will be
become
18%,
18%, and vice versa.
and the vice versa also. So the example which I will like, I am selling the goods. With that, there is also insurance covered. Insurance is a service, but the predominant is a sale. So therefore, even the insurance is also subject to tax at the rate of tax applicable to the goods. Now come to the works contract. Now currently works contract is a deemed sale under the VAT law, and there is also service tax applicable. So what do you mean by works contract, which involves both labor and a material? Now if you see the definition of works contract under the GST law, it says that the works contract with relating to an immovable property, okay, is whatever the works contract relating to an immovable property, schedule 2 says that it is deemed to be a service. Okay. For example, painting, okay, which involves where you are selling the paint and you are also providing the labor charges. Both, it's a works contract for an immovable property. So it is considered to be a service, and you need to apply the time of supply of service rules.
Okay.
Now, if there is a works contract relating to the movable property, now I have spoken about the immovable property, then if it is relating to the movable property, currently it is a works contract, but under the GST law, it won't be a works contract. Like you enter into a contract of AMC of a laptop. Laptop is a movable property. There you have to apply the composite supply or a mixed supply. Mixed supply is where both 50-50. So which is the higher rate, you apply that.
Okay.
So that's how it is.
Got it.
Under
So,
the GST.
Got it. So there's a concept of mixed supply, composite supply, and also works contract.
And works contract. Here works contract, you need to be very clear that it has to be with respect to immovable property. Then only it is a constituted to be a service. Like all builders, so they will be covered under the, or real estate, whatever it may, they will be covered under the service sector and not under the goods.
Got it. There was this, I mean, under the VAT regime, dealers are very aware of this term called unregistered dealers, or URD as it is famously called, right? So will there be a concept of URD even in GST, or how will that get tackled?
Yeah. If you see section 28, which speaks about the tax invoice, when you're supposed to raise a tax invoice, you know. So there section 28 subsection 3 speaks about even with respect to unregistered dealer. That means if a registered taxable person procures goods from an unregistered dealer, then he has to raise an invoice and discharge tax accordingly on the date of receipt of the goods. Here the time of supply will be the date of receipt of the goods.
Okay.
That's all.
Okay. And how do we look at time of supply when there is a change of rate of taxes?
Okay. Before I get into the change of rate of tax, with respect to URD, it also speaks about goods or services. I just told about goods.
Yes.
It covers also services. So any services received from an unregistered dealer also, you are liable to pay the tax under the GST regime. Now, like how we have unregistered dealer purchases under the VAT regime. Okay, if you are procuring goods from a unregistered dealer or a dealer who is not registered under the VAT law, or from any person who is not registered under the VAT law, the buying dealer is required to pay the taxes. Now, this concept is not there under the service tax regime. Like if you are procuring any services from a unregistered dealer or a person who is not registered under the service tax law, there is no requirement to pay the service tax. But under the GST law, the threshold limit what they have given is 20 lakhs. So any registered taxable person procures goods or services from an unregistered dealer or any person who is not registered, then on the date of receipt of goods, he is required to raise an invoice and discharge tax accordingly.
But for that, again, he will get his input credit and
Yeah.
life moves on that way.
That life moves on. That again we have to see the input tax restriction. So it's a different ballgame altogether.
So what happens in if there is a change of rate of tax in between? What would be the time of supply in that case?
Yeah. See, the time of supply in case of change in rate of tax, one has to look into that whether the goods or services supplied before the change in rate of tax, or when the goods or services supplied after the change in rate of tax. Like for example, 1st April there is a change in rate of tax. So I have supplied before the goods or services have been supplied before the change in rate of tax. The other scenario is that I have supplied after the change in rate of tax. So one has to look into that whether payment is received before, invoice is raised before, or service is provided before. So either of these three events, the two should occur earlier. Then that is the time of supply of goods. For example, there is a change in rate of tax effective 1st April 2017. So I have supplied the goods before the change in rate of tax. Payment is received after, invoice is raised after, then the new rate will be applicable. Vice versa. If the payment is received before, goods have been supplied before or services has been supplied before, but invoice is raised after, then the rate of tax will be before the change in rate of tax. The vice versa, even in case of where goods or services have been supplied after change in rate of tax, but invoice is raised before, payment is received before, then the rate of tax will be the before. If invoice is raised after, but payment is received later on, then the rate of tax will be the later rate. That is after the change in rate of tax.
And this is something very important for people to actually understand.
Absolutely.
Because since we at Tally impact a lot of small and medium business enterprises, such nuances are very important for people to understand, because
True.
It makes sense that yes, I've done it, but I want to do it at an older rate. But then at the time of assessment, if they get queries around this, they will just be not aware that okay, this kind of a provision is there.
True.
Thanks for this.
So the nutshell is that any of the two events should occur earlier.
Yeah.
Or later.
Yeah.
That's all.
I think that's something that people need to be aware of.
Correct.
So if you can just, in a nutshell, talk about time of supply of goods and services overall, it will help us wrap up and.
Yeah. See, if you see section 12 and also section 13, which speaks about time of supply of goods and time of supply of services, one has to look into the four concepts, basically, which is laid down under the GST law. One is a general rule. You know, what is a general rule is that the time of supply will be the date of invoice, or when he is supposed to raise an invoice under section 28, or the receipt of payment, whichever is earlier. That is a general rule. Second, in case of reverse charge mechanism, then you have to follow the reverse charge mechanism, that date of receipt of goods, date on which the payment is made, or the date immediately following 30 days or 60 days in case of services from the date of issue of invoice of the supplier. There is a third concept, is that in case of voucher, you know, there is also a voucher which are issued, which has not been discussed over here, is that in case of supply of voucher, the time of supply shall be the date of issue of the voucher or the date of redemption of voucher in all other cases. Okay. The last scenario, the fourth scenario is that if you are not able to determine what is the time of supply of goods or the services, then one has to look into that. In case of periodical returns has to be filed, then that is the time of supply of goods or services. And the last one is, in any other case, the date on which CGST or SGST or IGST is paid. One important point before I conclude is that whatever the provisions are applicable for CGST and SGST, the same provision will also be applicable for IGST. That's how the law has been drafted.
I think this was extremely insightful. I think the viewers will be very happy to understand in detail what actually time of supply means. Thanks, Naveen, for coming over and talking to us.
Thank you, Satya.
About time of supply. I think it's very important that people understand concepts, and this will surely be insightful for people. More information, please log on to our blogs on Tally Solutions, and we will ensure that we will keep you posted on whatever is happening in the world of GST. Thank you.